Let's kick off this morning in Asia with Tony Quinn, sitting there in beautiful Singapore. He's the operating partner of ProStar Capital and CEO of Tank Bank International. Tony, the oil market on Brent finally broke through 70 yesterday, closing above 70 for the first time in 2 years. We've opened this morning again in Asia with that upward trend still in place. Can you identify anything in this market that stops this continuous rise we've seen now? 12 months, oil prices doubled from $35 to 70 yesterday. What stops it from keep going?
Well, it really has to be. And sorry, good morning to everyone in the UAE, and hello to everyone around the world. And hello, Sean. Thank you again for having me on your program. I did change the view, and I'll explain.
Yeah, I like that. I do.
That actually, Sean, just for Sean's benefit, that's actually from the top. You said you want to be with a cocktail in hand, but
yes.
In the current lockdown scenario, unfortunately, a cocktail is out of the question.
Right. A virtual one.
I have a virtual glass of water instead.
There you go.
There you go. So anyway, just to take that, I think that will it continue? Well, it's really driven by Europe and the US. As always, it's always the sentiment in there. The drivers aren't really behind it that structure it going any higher. And of course, what does happen here is if it goes much higher, it's already hurting a lot of the Asian economies that are actually still growing, and that's where your big demand is. So you start sort of killing the stabbing the golden goose, I suppose, at this stage with a pitchfork or whatever, on the basis that, if you carry on like this, the Indian economy is going to really suffer. It already has complained when we were at 65. It's going to continue. Now you're going to see everyone else in Asia complaining, with the exception of Singapore, which is probably the oil bypass system. But this isn't good. And you know me, I'm always famously the $40 oil man. If it doesn't work at 40, it doesn't work. So we're way above my old limits now. I think it's too high. I think it should pull back. I would hazard a guess that this time next week we'll be around the low 60s again, and I hope so for the benefit of those.
What would push it there? Do you think? In terms of that would be quite a reversal. Let's just say.
Yeah, it would be, and I think that really some of the things that OPEC have been doing recently is all very good for OPEC, but it's got to look at its customer position, and actually to hurt those countries that its biggest demand is in is very, very dangerous for them long term. It's also countries that are suffering severely from, what I suppose is the third or fourth wave now of COVID-19, because we're seeing much a worse scenario in Asia than you're seeing in Europe and the US at the moment. So I think that you've got to take those things into account. And I think if you punish Asia with high oil prices, because we're the big buyer, you end up alienating customers down the road, and people remember that sort of thing. And particularly China, that's on the back end of purchasing as well. They've got a lot of power, and they're growing and selling products back into market more and more, particularly in this part of the world. And they could be more dominant and obviously outside of the OPEC scenario. So just have to be careful, I think, about where this is all going. I'm very much in favor of a lower oil price. It doesn't affect my business at all. Storage isn't affected by oil price unless you have a load of empty tanks doing nothing for six years out of every 10. So in a sense, I would like to see this down nearer the 60 mark, because that's more where it should be at the moment.
Let's welcome Vladimir Langhammer, Managing Director, Supply and Trading at OMV, who had a new CEO announced yesterday. So congratulations on that. Vladimir, your thoughts on the OPEC meeting? Essentially, do nothing, 30 minutes, out of here, leave everything as it was.
Hi there, good morning, and hello to everyone as well. From my side, there was a lot of happening yesterday in Vienna, right? Besides that, the OMV having a new CEO.
Yes, too, yes.
So obviously the OPEC meeting yesterday in Vienna, I think from our point of view, it wasn't unexpected. I think what OPEC has managed, and I've said it before in the last year, I think to show they can manage the prices, and now with kind of the managing of the prices with every month, they go from one meeting to another and kind of slightly tweak. There's not so many surprises. There weren't even too many kind of headlines around it, which you usually have, which go in both directions. I think that's kind of where you could see. I mean, the market.
They literally met for 25 minutes. So that was it.
Yeah, there was nothing. There was nothing new.
Online.
There was nothing new. They stick to their demand for forecast. Sorry, and therefore, there was nothing new. I think the new thing that was there from last time is that they said, should Iran come back, they kind of not gonna bring as much oil back, so they have a discretion. And I think that's what also makes the prices go up at the moment, is because yes, you're right. I mean, oil has doubled in price, but if you look at the wider commodities, I mean, oil is just catching up. I mean, if you look, in copper or some of the other, even agricultural, I mean, oil basically was a laggard. And I think by micromanaging it from OPEC, it has become more investable, because you have someone who kind of gives you the stability. In real terms, if you look at dollar, it also, the increase in real terms is not as much as it is on the screen in US dollars. So I think OPEC is kind of wanting it where it is, and it's the question what's going to happen. Should it go much more higher? And I agree with Tony, because they're absolutely aware of the demand side of that. But I think in real terms, they're comfortable where it is.
Chris Wood, CEO of Savanara, welcome back to the table. Chris, OPEC Plus could have signaled some sentiment to calm the market a little bit, as Tony indicated, concern for their customers, concern for the relatively fragile global economic recovery. They chose not to in any way signal further supply increases. And at the end of the day, putting the Saudi 1 million barrel aside, they're really just feeding very few extra barrels each month, essentially a rounding error. Are they making a mistake here, as Tony indicates, that they could have signaled something a little bit bearish?
Well, good morning and welcome thanks for having me come back. I think for once, OPEC has not surprised us. They've not made some announcements in all the meetings. The one surprise, I think, for me is the announcement of two successive meetings coming up. So they've got another meeting on the 24th of June and the following on the 1st of July, the extended OPEC meeting on the 1st of July. So that goes to show that they're still a bit nervous. They still want to see what's going to happen with the price. The price is going in the direction they wanted. It's not climbing hugely, but it's going in a direction that feeds the economies of the OPEC nations and oil producing nations. So it's no surprise that they just slowly just keeping things going in that right direction. There's no need to tweak anything. I think you asked Tony earlier a question: what can derail it? What can affect it? And I think there's one thing that I'm sort of a little bit hesitant in watching on is this Chinese investigation into their own oil industry, where they're having a look at where the oil's going, who's using the oil, with potential maybe they have to tax it. And on top of that, later this month, they'll be issuing their next quotas for the independent refineries and refineries of China. And that's the one thing, if they bring those quotas down, those import quotas, that'll further dampen sort of Asian demand in the region, on top of what the COVID impact has had on Asian demand, where we see refineries negative margins. It costs you a fortune to run a refinery in Asia right now.
And is there any outlook, Tony, for that to change? Are refiners going to come out of their maintenance season with some new opportunity? As Vladimir pointed out, this is on top of a weak dollar. So the pain of this higher oil price is being a little bit dulled by that.
Mute.
Tony, yeah, you're on mute. The old infamous, you're on mute. Everybody gets a t-shirt. We are on mute. That's the, you'll know when you get the t-shirt, COVID is over.
I've definitely got the mute on that. So yeah, I think that in terms of refining, I mean, this isn't the season really now. Nothing's going to happen now for a few months. We're not seeing closures anywhere around here. what we've seen is a lot of winding down of refinery activity, a lot of employment changes in some of the majors, particularly here on Jurong Island. But I'm not seeing anything specific that's going to affect it from my side. Now, really, the effect would probably more be from the European side, which has always been pretty much a stagnant sort of market these days on refining, or the US, which is bullish when it's bullish. It's now US market again. So, you know, $70 is, let's start pumping, boys. Let's start to do crazy investments, and they'll last for another few months, and then they'll pull them all back again. You know, the usual story applies.
From that point of view, in terms of Asian demand, I mean, what we're seeing in the US and Europe ultimately is a rebound from a, you know, practically dead on the door step sort of experience last year. But in Asia, we're depending on recovery, and it continues to be the growth of incremental demand coming out of Asia. Is there any reason to expect that to not be the case going forward, with Asia facing some challenges with COVID still?
Well, the fuel business has been relatively resilient throughout, and the countries that are actually have been affected, majority of the countries that have been affected in Southeast Asia, have not seen any volume dips in any significant volume matter, because we're dealing with countries of a very small import generally that have the major problems. China won't have a change and have been very resilient throughout the whole of the COVID situation, really, almost since the beginning. Singapore is doing extremely well at the moment. You know, all we're seeing is the figures in the economy rising all the time here, and volumes are, you know, really back to normal in terms of everything that's going in and out of the country here. Exports to other other Asian countries are also being maintained. So I'm not really seeing anything too much of a problem. My big issue is if it starts to get expensive, it's going to start to hurt the economies of those countries that are really struggling to actually get themselves out of COVID-19. And, you know, we've got a situation where if you take Singapore, for instance, I mean, Singapore is now 40% vaccinated, the entire population. So it's really doing well. It's got a major drive at the moment to push vaccinations by the National Day, which is the 9th of August this year. So at that point, they want 75% of the population completely vaccinated with 2 doses. Now that's a good target. But then if we look at, you know, poor old India, I mean, India's struggling at the moment with 3.2% vaccination rate. That's got a long way to go with, you know, millions and billions of people you've got to do there. You know, even Indonesia, it's really sort of 6.1% for Indonesia at the moment in terms of vaccinations. So Singapore is way ahead. And, you know, we had a presentation by the Prime Minister the other day here, which basically sort of said, look, we're not going to open any borders. We're not going to be doing we're going to be doing business with people, but we're not going to open any flights to anywhere around here for the moment. Malaysia, 9,000 cases last Saturday, you know, and they're struggling with vaccinations. So it's the old story. You know, the vaccinations have done very well. The UK has done brilliantly. It was pretty appalling in its management of the whole crisis to start with, but it covered itself up.
It seems like things have kind of reversed. The West had a really bad COVID, but of having a very good vaccine. Asia, yeah, the opposite. Vladimir, if we look at the things that OPEC didn't do in their 25 minutes yesterday was to signal output increases beyond July. They obviously committed to their current agreement, which is 700 in May, 700 in June this month, and a little more next month. But ultimately, no communication beyond that, except to say that they exceed demand returning. So they see 6 million barrels a day of oil demand recovery in 2021, but yet they're not going to tell us that they're going to meet it. Are they playing a wait-and-see game, do you think, on Iran? Because that is the big unknown at this current window, and they may need to leave a gap for that to start.
Yes, certainly. I think I alluded to in my first speech. That's what they also said. They said it actually last time around, is that because there is an uncertainty about Iranian volumes coming back to the market, they will not commit to the front. I think that's, you know, their confirmation of the demand side has pushed the price yesterday over 70. yeah, because that's how it's going to be managed. But yes, there is this uncertainty, and nobody knows when and if it comes back, and how much, and how
Well, it's
fast.
already coming back. We know that it's up to 6, 8,
Yes,
7.
yes, but that's already in the price. That's already in
Right.
the price, right? I mean, everybody kind of knows that. I mean, the China, as Chris has alluded to, China seems to be cracking it down a little bit on what can be brought into China with all the changes on the bitumen mix and what have you. But I think there is a big uncertainty, and OPEC will manage it, and they've shown it they will manage it. And I think that's also a part of
It
where the
does
price
seem that
is.
they're still, Chris, going very firmly after the inventory bill that we saw last year, which is now pretty much down to near 5-year average, maybe a few barrels to go. But ultimately, on this trend line, we're going to dip below the 5-year average in the third quarter.
I expect it will go below. It'll have to go below. Demand is only picking up now, so once that demand kicks in a bit more, you'll start to see a pull on the fuel and the volume. There's still a lot of refineries that are chosen to go into maintenance or mothballed. So you don't have the full capacity on the market, which is borne out by what you see in the US refining margins. They're phenomenal margins. You've got Asia on one side in the negatives, and you've got the US in the teens. It's a sort of story of
gasoline averaging over $3 a gallon across America, which in American terms is quite high.
Indeed, indeed. And the thing I think is important to watch is every time we have a sort of opening up, watch 3, 4, 5 weeks down the track to see whether the COVID cases start to spike. You see that time and time again as people start to relax, we start to see the numbers coming up. Now the question is, do we have enough appetite to go down into lockdowns going forward from there? If there is, we're talking about the UK, about potential another wave. Even the UAE, they're managing it very, very well. But you've seen post Ramadan and post Eid, 2 weeks after, the figures jumped up by 200 a day. So there's all these things. Singapore went back into lockdown. So I think with Europe opening up over the summer holidays, with the US getting back into moving around, let's watch what those COVID figures do, because I'm a little bit hesitant to say, yeah, it's done. We're there, mate. We're going ahead. And we're back to where we were back in 2019.
But if you look at the activity we've seen, Tony, over last weekend in the US, which is the infamous Memorial Day weekend, which is the sort of kickoff of the US summer holiday season in America, it was bumper bargain. I mean, it was off the charts. Whatever, I think it was 40 or 60 million Americans driving more than 60 miles, or 2 million people on airplanes. I mean, it was basically, we don't give a toss about COVID anymore. That's done. That's over. We're spending, we can't even spend our money because there isn't enough laptops.
No, well, if you give them another 2 or 3 weeks, let's just see what really happens there. Because I have an appalling view that this is all going to come down very, very badly, both in the UK and the US, because it's just been too loose. The whole thing we're seeing here, as the second epicenter of COVID here in Singapore, we've still only had, we might be in lockdown, but we've still only had 33 fatalities since last January 2020. So it's very, very well controlled here. But our problem is our next door neighbours are not very well controlled. So hence we get locked down because we have returning visitors coming from some of those countries. Returning residents coming from some of those countries who last infection, for instance, was from transit passengers at Changi Airport. We've had 2 of our hospitals that are obviously treating patients, all these sort of things. And we're still only getting 15 cases a day. We're not in the UAE. You're still getting 1,800 a day. As
it's about time. I suppose and we're nearly fully vaccinated as well, which is another strange thing.
Maybe just to take on that point of vaccination, a lot of people, and particularly a lot of my American friends, think they're absolutely 100% safe because they've had a vaccine. That's absolute rubbish. Because what you're only really treating the situation that you're not going to get into a serious condition. All right, you're not going to end up in ICU, maybe. We've had many of our people here in Singapore have been fully vaccinated, medical staff. They've got it again. or they've got it rather. So it's not a safeguard. If you go for the Chinese vaccines as well, you've got 50% efficacy on one of them. I mean, WHO may well have approved it as an emergency vaccine, but it's damn dangerous. And I know the UAE actually went for the Sino vaccines throughout the country. So, you're opened up, you're getting a lot of cases. I'm just worried. I'm just worried. In Singapore, they've only done the Moderna and the Pfizer full WHO approved. That's all. They're not putting anything else out there. So it's pretty dangerous. I'm very worried about what's going to happen in the US and Europe over the next few weeks.
Vladimir, again, to come back to where we started, despite the sort of these sentiments of concern, the oil market has marched its way through all of them. And since the vaccines arrived in late last year, I think it was in November, December, the oil market has just climbed every month and finished higher. This month, again, is there the net position, the open interest is on the long side. This market goes higher. What's your thoughts?
I think this market can go higher. The question is how much. Yeah, I mean, you had at the beginning the kind of the chart where people think it's going to be closer to 70 or 75. I mean, if you ask me, it's going to be somewhere between there. The recovery in some parts, I think, is robust, as we discussed. In some parts, it isn't. But even if, let's say, the demand doesn't come at 6 million a day, we will still be growing or be pretty much balanced if you look at the balances. Yeah, so you will get to the 5-year average or potentially below, even with some risk that the demand is not going to come as strong as forecasted some. So I think, if you look at it, what are the risks to the downside? If the US dollar stays where it is, Iranian doesn't come, even if we don't have more demand going forward, I think there is a support from the downside. So that's why.
What do you think of the argument that I would put forward that actually a deal on Iran could be bullish for the market rather than bearish, because it would remove this cloud of uncertainty about Iran being outside of the sort of remit of uncontrolled exports?
I mean, there is something to that. I mean, again, I am persuaded that by OPEC managing the oil on a monthly basis, it has lended as support to the oil price. Yeah, hence that goes with the theory that if you remove one of the risks, even if it's maybe seems bearish, actually it makes it more investable. And I think that Iran is there as a big unknown, although I believe also that the markets have actually priced it to return somewhere this year.
And I think OPEC Plus are signaling they're leaving space for that to happen. I think that includes the 1 million barrel cut that Saudi made in January. I don't think that was just the gift of the keeps on giving. Let's go to the survey question and get the view from the room on some of these issues. What tone does the 30-minute OPEC meeting yesterday set for oil markets in June? They seem to, sort of in some ways that in a way was a kind of a message in itself. We're not meeting for very long. I mean, it literally was 28 minutes, I think. But nonetheless, the tone, they never mentioned anything beyond July. They recommitted to July. Is the tone that meeting sets until the next meeting at the end of June, is it bullish, is it bearish, or is it neutral? What is the view of the room on that? We will see. Whoops, what did I do there? Okay, Chris, your thoughts on the outlook again, month ahead, the anything that you're seeing from them, particularly interested, where do you think refiners go? The US, it's bumper season. Does Asia have an opportunity to come back?
I'm not bullish on Asia. You had Singapore Airlines saying they've only got 24% of their passengers of 2019. You've got here in the Middle East, the CEO of Dubai Airports has been on a lot of news channels talking around their biggest markets is Ethiopia, Croatia, and I think I'm not sure who the other one was. So none of their core markets like India, Europe, UK are opening up. They're trying to get something running with the US to get people coming, but I don't see the airlines for Asia pulling in that demand to bring up the refining.
But that long haul aviation fuel consuming is not, I mean, we don't get that piece back, then we're out over our skis at this price.
Indeed, and I think that's the one thing that could pull it back in a bit. As I mentioned earlier, you've got China that they're concluding or looking at their refining, and they've got their quotas coming out later this month, which is interesting why OPEC timing of the next meeting is roughly around the same time as those quotas. So I think from that point of view, it's a tricky one to call. I can't see anything pushing it up higher. The US demand is priced in. The Europe demand is maybe prematurely priced in. We'll see, as Tony said, very concerned about where COVID can go, potentially if not managed well. So I think it's OPEC short meeting was one look. We're on course. We're keeping the ship stable, and it's delivering what we wanted to do. Any higher, it starts to bring investment into other areas that don't particularly want investment. Any lower, and they start losing out again. So yeah, nice quick meeting. Well done, guys. Slap on the back and move on.
Well, it's one of the benefits of the virtual meeting. You don't have to fly all the way to Vienna to do. Anyway, all the hotel rooms are taken by all the Iranians and others negotiating there endlessly. Tony, your thoughts quickly on the inventory, the global stock build declining now below 5-year average over the next month or so. What is the outlook for storage? Have we seen China drawing on storage in order to meet demand rather than paying for expensive crude oil? Will that continue? What is your outlook there?
The storage market's been relatively flat. I mean, obviously, my concentration is more Southeast Asia, Caribbean, Europe, and Middle East. But China is not really a visible scenario on storage, as most of it is government owned, and a lot of it is compulsory and strategic stock. So, right. And that's sold into refining processes as well, of course. So, but in terms of, like the Jurong Island complex here on Singapore, everyone I talk to here all pretty much buoyant. Everything is okay. There isn't the throughput that we had, and the throughput's down a little, but storage terminals don't live totally on throughput. If the storage company doesn't do 12 turns a year, it's not going to be a real problem to the storage company. If they do more than 12, then that's a big bonus for the storage company, and everyone is sitting within that average. So nothing too spectacular happening. Everyone is pretty much up to the gunnels in terms of contract.
There is talk that there's a lot of floating storage of Iranian crude ready to go.
Yeah, well, I think there always is, because it has to float most of the time, doesn't it? I think it floats till it changes its name or does whatever it does. So
it's one of those little magic tricks.
No one can store it, so unless you're in China. So in a sense, it has to float, and it floats and until it's bought, and it's bought usually, and then transfers into some other sort of despot location or China, and so that's the way it is. That's always going to be floating there.
Let's get the survey result and give Vladimir the last word today. What tone is bullish? 47%. Neutral, and certainly not bearish, according to most in this room. Vladimir, your closing thoughts on the direction of the market. We've seen it, in the immediate term, today, tomorrow, it's opened up in Asia, but not with a strong bounce. Obviously, the close above 70 yesterday. Do you think we hold above 70 as a close through the week?
I think so. Or it's going to be very close to 70. I think we've breached it. We hold there yesterday. We've held Asia today. I think and I can't see what would it mean down again. Yeah, the rolls are out of the way. So if you ask me for the next week, yes, I believe it's going to be above 70.
Okay, well, let's wrap it up there. Chris, thank you so much. Your buildings are maybe a little bit nicer than Tony's, I'm not sure, but the battle of the backdrops, we like that. Vladimir, you got to get on side there now. You've got a beautiful backdrop there in London. My God, it's one of my favorite in the world, the way they mix the old and the new in London. Great interview. Great interview, just about to post with Amos Hochstein, who was the senior energy advisor to the Obama administration. And he was sort of Mr. Sanctions in the Obama administration on the Iran oil exports. So some very, very useful insights on what he's talking about regarding the negotiations in Iran. Ultimately, he's saying, don't expect the Big Bang Agreement. This is going to be some kind of drip feed exercise, and don't think it's coming anytime soon. Anyway, it's a good half-hour interview, 20 minutes anyway, when you have a chance. So all the best. Thanks, everybody. We'll catch up with you in the coming days. Take care.